What's going on, investing family? You're listening to the Stock Market Tour Guide podcast, where I help you navigate the uncertain world that is the stock market. I'm your host, Stock Market Jay, and I'm here to save the day, bringing you the news you can use with regular fundamental analysis, insights, helpful tools, and strategies. All right, guys, so as a disclaimer before we get started, as always, I just like to make sure it's known that this is not financial advice. I am not a financial advisor, okay? I'm not your stock picking guru. I'm not the guy that's going to make all your dreams come true. I am an active fundamental investor who believes in the power of proper education, okay? And proper education prevents, poor performance in anything that you do, right? Um, this is an educational platform. People who don't want to do the necessary work to properly manage risk, right? And that's where education comes in. It reduces risk and maximize potential profits and gains. And anyone that doesn't want to do the necessary work in order to fundamentally, safely, intelligently, and practically invest are more than welcome to leave. Okay, I don't want you a part of my community. I don't want you a part of nothing that I do, because I don't respect you. I don't respect speculative gamblers. If that's the case, go buy you a lottery ticket. Go to the casino and go gamble your money. This is actual investing that I preach and that I teach. Okay, I wanna help people learn how to invest and learn how to invest in strong, wonderful companies at an attractive price and make a profit. Right, that's the name of the game. Please uh, subscribe to my channel. Like my channel. Um, like my video. Comment, share, and let me know your opinion on it. Right. If you're listening on my podcast, definitely spread the word to as many people as you possibly can and let them know. You can find me on Apple Podcasts, Google Podcasts, Stitcher, Overcast, Amazon Music, Radio Public, and it's going to be a stock market tour guide. You can catch me on Facebook, Justin Lamar. You can catch me on Instagram, Stock Market J. My goal and my mission is to properly educate as many people as I possibly can and give as many people the tools needed to succeed and to proficiently invest, right? So tune in, tap in, catch me on social media. I'm most active on Facebook right now, because you can actually write the statuses and like do a bit more. Um, but I'm here to help. I'm here to serve, and I'm here to give back abundantly to as many people as humanly possible. And that's why I encourage people to tune in, not only to me, but to anyone that you feel that can help you succeed in any endeavor, whether it's investing or business or becoming a better person, whatever the case may be. You want to tune into something. You want to feed yourself and pour into yourself, give yourself the proper education, and that's the true way to invest in yourself, and that's how you can truly win at the game of investing. So today, I want to discuss dividend investing or income investing. Right, that's my favorite, dividend stock. So me personally, I am a fundamental investor, as many of you know. Um, I am a long-term investor. I am a dividend and an income investor. Um, I appreciate getting good value for the companies that I own, which also makes me a value investor. I started out as just, while I was learning the the stock market and how it worked and what everything was, I didn't know that I was a value investor. I just knew I wanted to make money in the stock market. I'm not even sure if I cared whether the stock price appreciated. I believe they did because that's just what they do over time. But especially because it was a bull cycle when I started in 2021, early 2021, March 2021. But I didn't know I just knew I wanted to make some money, right? I ended up getting paid a dividend, maybe like $2. It was something small. It wasn't nothing real significant because I was looking to make money in crypto when Dogecoin came out. That's the crazy thing about it. I'm actually not even a crypto fan. Not now. I understand things a lot better. But anywho, that's a story for a different day. So I made about $2 or $3, and I was like, man, I made that money without even trying. What if I actually tried to make some money investing in the stock market, and try to make monthly income or recurring income or whatever it was at the time, because I didn't know, which I know to be now, passive dividend income, right? Um, so what dividends are is it's a typically a quarterly payout from a corporation or a company, a business, to its shareholders in the form of actual cash. Like it goes to your brokerage account. It's actual cash that goes to your brokerage account. They pay you for owning a share of their stock. The more shares that you own, the more money that you make in dividends. Each um, each company pays a different dividend only because of all of them have different yields that they pay, which would be the equivalent to the interest that you make on a savings account in your bank or a checking account, where they pay you like 0.05% interest. That's the same thing as a dividend yield. You would have like 2% interest on a $10 stock. You know what I'm saying? So in that, what that would equate to is the annualized dividend of 20 cents, and it would get broken down into quarters. For that one particular share, of course, it'll be annualized on a $10 stock. 2% yield would get annualized as 20%. I mean 20 cents. I'm sorry, and then it'll get paid out. That'll be over the course of a year. It'll be paid out every quarter, so 4 quarters. Into that 20 cents will be $5 a quarter. Of course, every stock is different. Every stock's not worth $10. Every company doesn't pay a 2% yield. Some might pay a 1%. Some might pay a 0.5%. Some might pay something insane or absurd or crazy like a 7 or 6%. Banks aren't paying that. That's just what I want the people to understand. Stocks pay higher yields because stocks are using your money to grow their business. Banks do the same, but banks are just a decent place to house your money. Maybe if you want credit products or something like that, you want to build that relationship, get that banking data and stuff. The stock market is a great place to actually build wealth, to put your money to build wealth. And that's why dividend investing is so cool, because it's a great way to earn passive income. Okay. And that's what I've been doing with it. And that's where I started that's the way I started initially using the stock market to invest, was to build my passive income streams up, with A, to get another stream of income, and B, build it up. The more money you put in, the more money you make. That's how it works. um, so that's a great way to look at it. What I like to do is I like to see, okay, well, I make X amount for this company right here, can I pay a bill with that? Okay, I make Y amount for this company right here, can I pay a bill with that? And I like to build those companies up to the point to where I can pay a bill with these stocks that I'm getting paid to own shares of these companies, these wonderful businesses. Because you're not owning a stock. You buy the stock, hopefully at an attractive price, but you own the company, and the stock isn't paying you for it. The business is paying you for it. And then of course, the more money the business makes, the more the business grows, the more the stock price increases, the more your dividend will increase, as with anything else, because the yield is going into that amount, that stock amount. And you have a few companies that actually raise, not a few companies, a lot of companies that actually raise their dividend year over year. These are going to be dividend challengers. They raise their dividend every 5 years. Well, they have a history of raising a dividend over the previous 5 years. Dividend contenders, they have a history of raising their dividend once a year for the last 10 years. Dividend champions, they have a history of raising their dividend for the last 25 years. The dividend kings, the dividend aristocrats, they have known to been raising their dividend over the last 50 years, every year. Okay, that's a beautiful thing, because the way dividends work is, if you get paid for these businesses, um, and they're increasing that payout. So this is the thing. This is why you want to invest in companies that increase their dividend, because let's say you own 10 shares of company XYZ, and company XYZ pays um, 25 cents a year in dividends. And then let's say the next year, well, that would be $2.50 for that company that you would make in dividends for owning those 10 shares. And then let's say company XYZ raises that dividend to 50 cents, which great companies oftentimes do. Well, now you're making $5 for the year. I mean, for those 10 shares instead of the $2.50. So now your income increased, right? That's how it works. So you want to invest in companies that have a track record of increasing their dividend over time in order to increase your income. That's the name of the game. That's literally why we're investing, right? To increase our income, to build our wealth, and to build generational wealth, right? um Dividends are a great way to do that. And dividends, typically you want to reinvest those. Okay, so when I say I want a company, I want to when I say can this stock right here, can this company pay this bill with this dividend, I'm not saying I'm going to take that money and go pay a bill with it, because I reinvest my dividends. And I encourage any investor that's, especially if they're young in their investing journey, or if they're young, like just, they're young of age, I encourage them to reinvest the dividends and kind of snowball and speed up that compounding effect. Because more dividends you use, that's more shares. When you reinvest the dividends, you reinvesting it back into that stock, right? So if I have company XYZ again, and I get paid 50 cents a share of that stock in dividends, and that equates to $1 right there. That's $1. I mean $5. I'm sorry. Then that means in quarter number two, if that company stock price stays the same at $10, it would have had bought me a full share of that company just by reinvesting that dividend. And that's free money. That's free cash. The company is giving you that. They pay a dividend to shareholders as a way to give back for increasing their profits and increasing their free cash flow and their bottom line number, right? So dividend companies are typically the stronger ones, the ones that have been increasing their dividends for like 5, 10 years, 20 years type of deal, 50 years. These are going to be typically stronger companies, bigger companies who are well established in their growth. They might still grow 7% a year, 10% a year, 8% a year, 6% a year. But since they're so big, it doesn't look like it's a large move where you will have a smaller company, a younger company who's growing 20% a year, 15% a year. Uh, they still have a lot more work to do, right? They have a lot of work ahead of them. Where you have these big, strong, wonderful companies that have been around for a long time. Like I said, they've been increasing dividends for 50 years. Um, they're all about increasing profits. They're not so much concerned about like your tech companies or your growth companies, your smaller cap companies that are trying to become bigger companies. They're not so concerned about um, the revenue and growing the revenues and stuff like that, and growing as a doing something. Now, of course, every company needs to be innovative and they need to do something to kind of stay ahead, stay with the times, but the slow growers, they're the big companies, they're not so interested in, let me make a splash in the market. They did that already. They did that when they were a smaller company. They did that when they were an emerging company. Now they're a big, wonderful company who is a sustainable business, clearly, because they possibly been around for 50 years plus, right? And they've been raising the dividend for 50 years plus. So their goal is to, of course, grow their profits, their free cash flow, their bottom line, right? And of course, grow their business year over year, and then they distribute that back to the shareholder, who does play a big part in these companies. In the companies, like guidances, like as a shareholder, you're an owner of that company. You put your money into that business so that company can continue to grow and expand, right? And don't get me wrong, our goal as shareholders is to make money on the growth of the business. That's why you want to invest in strong, wonderful companies at an attractive price, because we want to capitalize on that business. That business is growing year over year. Our income as a dividend investor is hopefully growing year over year, and it will reflect in that stock price as well, which will be growing year over year if the business is growing. So more shares, like back to my example. So now let's say I got a full share of company XYZ after 2 quarters, because the stock price didn't change. Now it's Now it's selling at, now the dividend over the past 2 quarters went from $5 to $10. I reinvested both of them, so now I have 11 shares. So now when I get paid this next quarter in dividends, now I end up getting paid $5.50 instead of just the $5. My my return or my income has went up at this point, and that kind of steamrolls that snowball and compounding effect when you reinvest those dividends, right? Now your portfolio is growing, right? Because you're just getting income. The income is going back into that portfolio and it's going back into that stock. So now you're getting more shares. Now you have more money invested, and more money invested means a higher rate of return. If I make 10% on $100, that's a whole lot different than making 10% on $1,000, because 10% of 1,000 is 100, as opposed to only making $10 on that 10% of 100. You see what I'm saying? The more shares you have, the more money you make. Whether it's in the return that you get for the for your year over year return that you make for the growth of that stock, or when you compound that with the dividend effect, which goes back into that, they kind of coincide together. That increases your rate of return year over year as well, and that's what you want. You want more bang for your buck. Some people are at a stage in their journey, in their investing journey, where dividends, they're not too concerned with them. They're more concerned about growth over the long term, and that's fine. But for me, at this stage in my investing journey, I am a dividend investor. I am an income investor, and I want to make some money, right? I want to grow my portfolio and snowball my portfolio into, something big and worthy, right? So right now, while I'm constantly pouring into it with my extra income, my disposable income, right, that I invest regularly, I'm also I'm also getting aided and assisted by that dividend that I'm receiving every quarter from these companies, and it ends up turning into monthly passive income, because different companies pay out their dividends at different points in the year. It's all going to be in the same quarter, but instead of them, you might have one company that pays out a dividend in the first month of the quarter, or another one in the second month of the quarter, or another one in the third month of the quarter. So let's say you have a big portfolio of 15 companies, right? And they all pay a dividend. You'll end up possibly getting paid 5 companies 1 month, 5 companies another month, 5 companies another month, or one company this month, six that one, and then eight in that one. You never know. So depending on how the dividends fall, chances are you're going to be making monthly passive income, which is the name of the game. That's what you want, right? Um, dividends, they're the dividend stocks, or dividend paying stocks, and I'm going to kind of change gears a little bit. Dividend paying stocks are closely related to the value stocks, in the sense, because they're not as volatile. They grow, they're slow growers, um, and they grow year over year. The big wonderful companies do, right? The growth stocks are going to be more, they're gonna grow faster. They're gonna be more volatile. You have to have the stomach for that. And my temperament, me understanding the type of investor I am, me having the emotional intelligence that I have, I know that I'm not really that risk on. I have like two speculative companies out of like 16. You know what I'm saying? In my portfolio, um, I'm not that risk on. I don't mind the volatility. I don't mind volatility. That's not an issue. But I want to invest in companies that I know that have a track record, not companies that I predict will continue to grow. I have a that I predict will, you know, make noise in the markets. I'm talking about, these are companies that I know for a fact have a track record of growth, have a track record of continuous increasing earnings and beating earnings, have a track record of growing revenues, have a track record of growing free cash flow, have a track record of being a healthy company with a solid business model, have a track record of having a healthy balance sheet, have a track record of growing profits, okay, have a track record of growing dividends. I wanna have that track record to go with that futuristic thinking, right? That futuristic outlook. I don't want to just speculate on it. So I like companies that that's why I like dividend companies and value companies. And if you get them at an attractive price, which you can do with dividend companies, the only difference between those and value companies is that they pay a dividend. Um, you want to buy them at an attractive price. So you want to buy them under market value, get it as close to 50% off as you possibly can. And then when it finally gets to market value or gets what its intrinsic value, known as its intrinsic value, you would have made a 50% return on your money already. And that's the beauty in value investing. And you can find value in dividend stocks as well. Um, like I say, you wanna invest in good, strong companies. The stock price is just a number. Don't let that number make you fool you into believing that it's a great company. Okay, because you can have a crappy company with a big stock price because people are Wall Street or the common investor that doesn't know any better continues to pour money into that stock, and it's a failing business like GameStop. They might be out of like business in the next 3 to 5 years, but people keep buying their stock. I don't know how their stock price is where it's at right now. Like people keep buying the stock, people keep choosing to own the company. At this point, they're not even doing things to grow their business. They're like in the NFT market and stuff like that, and they're like buying stake in crypto. Like they're not doing anything to fundamentally grow their business. I think they're trying to like diversify their holdings and their investments so they can like get excitement around the stock and the company, and b to so they can just like maybe be a profitable business. But as of right now, I don't see that company really doing. I don't know why. I don't know how their stock is still going up, or how people even attempt to invest in them. But I digress. Dividends. If you're looking for that extra income, and like I said, I encourage everyone to reinvest that dividend income. It's better for your portfolio, and the purpose of investing is to build up your not your nest egg, but build yourself up for retirement. Build your future self up for retirement. That's the purpose of investing, right? You're putting your money somewhere, whether it's real estate, whether it's the ATM business, whether it's car rental industry, whether it's stocks, whether it's bonds, whether it's crypto, whatever asset class you choose to invest in. It can be commodities, gold, or something. Who cares? Oil, you can invest in oil. The purpose of investing is to put your money into a tool or into a vehicle to where your money can grow for you year over year. That's all investing is. Whether it's a business, investing in stocks is investing in businesses, but or if you're actually investing in a business, becoming a partner in a business, or buying a business, like outside of the stock market, that's what you're doing. You're putting your money in a place that it can grow for you. Um, so why not reinvest those dividends and make sure that you can get the most bang for your buck? Make sure that you can grow your portfolio as fast as humanly possible. Make sure that you can continue to increase your holdings in your positions in these companies so you can make more money in the long run. More money invested means more money made. All right, that's what people have to understand. But if you don't do the proper education, right, if you don't take the steps to properly educate yourself, then you're missing out on a key component of investing. Like you're not going to be able to have an early retirement, or you're not going to be able to pass your portfolio down because it's not going to be worth passing down, right? You won't be able to, let's say you do retire and now you want to stop reinvesting those dividends. Hello, you've built up that portfolio so much from reinvesting those dividends and also investing into the company yourself with your free your expendable capital, that you built up these dividends to the point to where you can live off of them now. You can make $4 grand a month in dividends. You can make $5 grand a month in dividends. Things like that, to where you can actually live on your investment. That's the name of the game. Can you become so? Can you build up that asset and keep your liabilities to a minimum to where you can successfully become free from the workplace via that investment vehicle? That's the name of the game. Can I build up this portfolio to the point to where it can it can I can substitute and supplement my income from working income to strictly living on that passive income, right? That's the name of the game. But you have to do the fundamental research in order to get to that point. You have to invest in yourself and do the research, build yourself up to that point to where you can do that, or you will never be able to live that type of life, right? So that's my story right there. Dividends are a great way to aid and assist in growing your portfolio. Dividends are a great thing that it's a great source of extra income. Um, and dividends can be a great source to increase your money when you are investing into these companies that grow their dividend every year. Okay, when you're investing into a company that has a track record of growing its dividend, you automatically know that you're going to increase your cash flow every single year. Imagine if you do that for every company that you own. Okay, and imagine if every company that you own, you got an attractive undervalued price. These are winning formulas right here, but you have to know how to play the game. You have to do the proper education and learn how to play the game. I just My goal is to properly educate and equip as many people as I can to become better investors, right? So tune in to the to the content. Subscribe to the content. If you're on YouTube right now, subscribe. If you're on my podcast, my YouTube is Stock Market J. Subscribe. Let me know what you think. Let me give me topics that you want me to discuss, and let's build together, right? Let's learn together, and then let's earn together, because that's what this is all about: building a community where like-minded individuals can come and earn and learn together, right? That's what this is all about. Man, this has been a blast, guys. Just like always. Until next time, I'm your host, Stock Market J, and I'm here to say today, peace, guys.